Let me read you the first sentence from the top story on Yahoo Finance yesterday. It reads, the United States economy employed 818,000 fewer people than originally reported as of March 2024, showing that the labor market may have been cooling long before initially thought. Now, this comes at an interesting time because yesterday we also got the Federal Reserve Bank meeting minutes. And what that showed us is that we have a lot more Federal Reserve Bank officials that are now hinting at this idea of cutting interest rates coming September. Now, the reason why this comes at an interesting time is because, of course, when the Federal Reserve Bank makes their decisions to cut or raise interest rates, what are they paying attention to? Number one, they're looking at inflation numbers. Number two, they're looking at maximum employment, meaning they're looking at job growth. And when we look at the inflation numbers, according to the data that's reported, it looks like inflation has cooled. Not that the prices of things have fallen, but the rate at which inflation is rising has come down. Now, of course, we're not at the 2% number that the Federal Reserve Bank wants, but it's come down from the highs that we saw back in 2022 and 2023. And so when the Federal Reserve Bank looks at the inflation numbers, now they're saying that, we're on target for 2%, so it looks like inflation is kind of under control. But it looks like the job market might not be, because now we're getting data saying that the job market might be worse than expected. It might have started sooner than we originally expected. And this is why a lot of people are going to keep their eyes on what the Federal Reserve Bank is going to say this Friday, because there's a big central bankers meeting happening at Jackson Hole, Wyoming. And yes, I'll be keeping you posted here. So I want to talk about what all this means and how this affects you. Of course, if you've been reading market briefs, we cover what's going on in real-time. Market briefs is my free financial newsletter where every day my team is working to break down what's happening in the financial markets. It's a quick and witty read. You can read it in less than 5 minutes every morning, and it's completely free. So if you haven't joined market briefs yet, I got the link for you down in the description below. Now, what I want you to understand is there are things that happen in the news that can trigger things in the stock market. What do I mean by that? 2 weeks ago, we got a job market report which said that the job market added less jobs than expected. When that happened, it triggered a big stock market sell-off. Yesterday, we got the news that the previous jobs numbers were off by almost 1 million jobs, that the economy employed 800,000 some people fewer than expected. And the stock market didn't really care. The reason why this is important for you is because as an investor, there's a lot of emotions out there and there's a lot of news out there. And those emotions can then drive some people to make bad financial decisions. And I want you to be a financially savvy investor. And what that means is you don't want to get caught up in the day-to-day news. You don't want to get caught up in the day-to-day emotions, but rather you want to be an investor that understands 3 things. Number 1, how to be financially prepared. Number 2, how are you financially educated? And number 3, are you paying attention to the financial trends? When it comes to the financial preparedness, what that means for you as a financially savvy person is you got to understand if you want to build wealth in this economic system, you have to be an investor. If you want to build wealth, you can't just work a job and make a big salary. You can't just start a business and expect the income of the business to continue funding you, because if you stop working in the business and you can't replace yourself, if it's not a big business, if it's a small business and you cannot replace yourself, well, how are you going to ever take a vacation? How are you going to ever stop working? And if you were to get sick, how are you going to continue getting paid? You have to start thinking about these things. Now, most of the time, when people are thinking about this type of, I don't want to work anymore, they're thinking about retirement. But it doesn't have to wait until you're 65. So what I want you to understand now is if you want to build wealth, our economic system is designed to reward investors. It's not designed to reward employees. It's not designed to reward consumers. And yet every single person in our economic system is taught, go to school, get good grades, get a good job, and then spend your money. This is what we're taught to do. But our economic system is designed to reward investors. What do I mean by this? Well, we know that inflation happens in our economic system. If you joined me on my Investor Summit, you heard me talk about this. The Federal Reserve Bank was created in 1913. That changed our monetary system forever. In 1971, the dollar was taken off of the gold standard, which changed our money forever. That allowed the Federal Reserve Bank to essentially print an unlimited amount of money. So now when the Federal Reserve Bank can print money without needing more wealth, more collateral, more physical gold, what does that mean? That means the Federal Reserve Bank can create more dollars. If more dollars are being created, the value of each individual dollar that's out there goes down. So if you have $1,000 sitting under your mattress, you have $1,000 sitting in your bank that's not growing, that $1,000 stays $1,000, but the things that the $1,000 can buy starts to go down. And this is where now you got to understand, this inflation hurts consumers. because that means you need more money to buy a guac, you need more money to buy the BMW, you need more money to buy a house. But that inflation also benefits investors. If you take a look at the last 5 years, what we've seen is the incomes have grown, but they haven't grown fast enough to keep up with the cost of buying a car, the cost of tuition, the cost of groceries, and the cost of a lot of other things. But the prices of things that have grown fast are asset prices. If you look at the stock market over the last 5 years, it has boomed. So investors have built wealth while the average person just relying on their salary hasn't. Why? Because inflation is designed to benefit investors, not to mention that our tax code is also designed to benefit investors. How do I know that? Well, as a licensed attorney, who's not your attorney, what I can tell you is that our tax code has some of the biggest and best tax breaks available for investors, not for employees. When you are a W-2 salary earner, you qualify for the least tax deductions, and you also pay the highest tax rates. As an investor, you qualify for lower tax rates and higher potential tax write-offs. Our economic system is designed to benefit investors, but in order for you to be an investor, you have to have money to invest. That means you can't spend all of your money. This is what being financially educated and being financially savvy is all about. Is number one, you got to be prepared. That means you can't spend all of your money. You got to have money to save, you got to have money to invest, and you got to have the ability to actually capitalize on an investment. Because if you saw an amazing investment opportunity tomorrow, if you saw the best investment opportunity in the world tomorrow, would you have the money to actually go out and invest? If not, it doesn't do you any good if you identified that financial opportunity. You could have all the financial education in the world. You can watch all the YouTube videos. You could read every single book on investing. You see an opportunity, if you don't got the money to do anything about it, it doesn't do you any good. That's why you got to start with being financially prepared. Number two is you got to build your financial education. Now, of course, we talk about what's happening in the markets and market briefs, like I just talked about, but your financial education goes a little bit deeper, because your financial education is all about how do you analyze your investments. This means now, I want to invest in this ETF. Is it a good ETF or a bad ETF? What does the expense ratio look like? How many assets does it have under management? Or I want to invest in the Amazon stock. Is it a good stock or bad stock? Is it overvalued or undervalued? What does a cash flow statement look like? What does a balance sheet look like? What does your income statement look like? This is where you have to develop your investment strategy. What we know is that there are 3 asset classes that have built more wealth than anything else over the last century. They are, number 1, building a business, number 2, investing in real estate, number 3, investing in stocks. These 3 things are time tested. Now, building a business is a little bit of an outlier in the sense that it's different than just passively investing your money into something else. Stocks and real estate are the 2 investment classes that allow you to deploy your money. You can work a job, but you deploy your money into these assets to build wealth through these things, and they have been time tested. Now, despite the fact that the stock market has grown by around 10% a year for the last century, many people end up losing money in the stock market. Why? Because either they don't know what they're investing in, or number 2, they don't have the psychology to manage their investments. Because when you see the stock market go down for a little bit, you panic, you freak out, and you sell. Because you don't know how to manage your investment. You don't know how to manage your psychology when it comes to investing your money. This is what the financial education is all about. Is to, number 1, build a strategy. Know what your goals are. Are you investing for cash flow? Are you investing for growth? Are you investing in stocks? Are you investing in real estate? What type of investments are you looking for? That's your financial education. And then the third part of this trio is understanding the financial trends. This means understanding which sector do you want to be investing your money in. Now, when we talk about financial trends, the most obvious one is artificial intelligence, because this has been covered heavily on the news. But this isn't the only trend that happens. There's lots of trends that happen in our economy. For example, when the United States government changes laws or creates new regulations, that changes spending habits. Like when the United States government or states started legalizing sports betting, what happened? More dollars flew into sports betting apps, which meant those businesses started making more money. This is where you want to pay attention to changes in spending habits, changes in spending behaviors. It's easy to understand this in real estate because you want to look at, is money moving into this neighborhood? Are people moving into this neighborhood? Are businesses moving into this neighborhood, or are they moving out? You can see that with your own eyes. When it comes to businesses and stocks, it's a little bit more difficult because you got to get a little bit more involved. This is where your research is so important, to pay attention to what is happening in the financial markets and how are spending habits changing. If you can understand that, now you can find a good industry, a good sector, a good area to look into investing. Now, as you identify a trend, that's when you want to look for an individual investment. Do you want to invest in an index fund, an ETF, an individual company, or do you want to start a business in this thing? Then once you understand that, this is where you can start doing your own financial education to analyze that investment to see if it's a good investment for you. And then once you identify a good investment, that's when your financial preparedness comes in handy, because then you can use the money that you have put aside to invest and actually deploy that into your investments. This is the full trio of financial education. It's being financially prepared, it's having the financial education, and it's understanding the financial trends. And unfortunately, if you want to succeed with this, you're going to have to be the one that goes out of your way to learn these things. You can start with YouTube videos, read books. Market Briefs is a free resource to stay up to date on what's happening. We have a newsletter called Market Briefs Pro that keeps you up to date on financial trends. But this is where you got to start investing in your own financial education, because the reality is there's a lot of hype out there. There's a lot of emotion out there. There's a lot of craziness out there. But you want to be able to find the opportunity, because those opportunities are where the wealth is going to be built. And yes, there's good news, there's bad news, there's sideways news. But at the end of the day, it's all just news. And as a long-term investor, the day-to-day news really doesn't affect you that much. You want to understand how this news is changing different parts of the economy, because as an investor, you want to pay attention to the bigger trends, not the day-to-day swings. And with that, I will see you tomorrow.